Hey guys, thank you for tuning in today. I am Keneshia Haye, your Jacksonville VA home loan specialist. And so guys, today I have Justin Travis with me from the Bank of England. And today guys, we're going to dive into, is this a good time to purchase? So Justin, I'll give you the floor. Go ahead and introduce yourself to these wonderful people.
Hello everyone, my name is Justin Travis. I work with Bank of England Mortgage here in the Jacksonville market. But yeah, Keneshia, I appreciate you guys having me here today. It's very special and I'm honored to be here and kind of talk about, what the Jacksonville market looks like right now.
Right.
It's exciting,
so it really is.
Yeah, I agree. We're in a situation where there's a lot of doom and gloom out there.
Right.
And we hear that on a day-to-day basis, especially, being in the mortgage industry.
Right.
I'm out there talking to these agents and stopping at different offices, and a lot of the vibe is, oh man, what are we going to do? The interest rates are so high, we can't sell these homes. And, so what I'm really trying to do is get out there and show people that there's opportunities.
It is.
There's ways to get creative, and, educating our agents, educating our buyers on those has been so important.
Right.
So that's why I'm here today. I just want to kind of talk a little bit about some of those things, ways that we've been able to kind of get creative and, help these buyers put themselves into a situation where they can build wealth to kind of set themselves up and their families for success down the road.
And what's really conducive for them.
Exactly.
Each situation is different.
Yeah.
What will work for one may not work for someone else. And as we were talking beforehand, Justin, you threw out something very, very great, that if a buyer is purchasing and they only have maybe 2 years at a location versus a buyer that's purchasing and they have 10, 15 years. Maybe this is going to be your long-term residence that you're purchasing. This scenario may work for you, but it may not work for a 2-year person, right?
Yeah. And that is definitely one of those things that we like to handle on the front end. We at our bank, we kind of talk about different lenders and, different opportunities. And, so if you were to go to one of those big credit unions, some of those places, I won't name anybody by name, of course not. But what we kind of call it is it's a little bit more of a fast food. Hey, have it your way. You're going to call, I'll take a number 5. And that's it.
Right.
So the difference is with our bank and what we're kind of creating is opportunities to understand that buyer's situation.
Exactly.
Learn about their family, learn about their wants, their desires, their pain points, things that are important to them.
Yeah.
So if this person's only going to be there for 2 years, is this a situation where, hey, do we want to pay points and, add things to lower that interest rate? Or do we want to keep it where it's at because we know, hey, in 2 years, we may not break even on how much we're actually going to be spending on those interest rate points to lower it.
Right.
So that's where we're having a lot of those conversations on the front end, kind of understand what their desires are, and then we can kind of look at options.
Right.
So, instead of it being a situation of, hey, this is the one option for you.
Exactly.
I'm laying things out and saying, hey, here's option A, B, C, and D.
Right.
Let's talk about it. Let's figure out what would be the best option for you. So that way we could set yourselves up for success going down the road. And in 2 years, we can look at the situation and say, hey, we were ready for this. We knew this was going to happen. Let's go ahead and give Justin Travis at Bank of England a call and see how we can set. Exactly. Whether that be a refinance down that road.
Exactly.
Whatever the case may be.
Because it's a case-by-case scenario. For sure. Because if you get a buyer that comes in, and we're in a predominantly military area, we have 2 large bases here. We have NAS Jax and Mayport. So when we have veterans or military members coming from these different states, we need to match what's going on in their situation. So a lot of us, because I'm prior military also, prior to moving to a duty station, we get our orders. And in the orders, it'll let us know pretty much kind of like where you're going, when you're going to be there, and kind of like your time frame.
Yeah.
Granted, in the military, it fluctuates. Sometimes you may think you're going to be there for 3 years and you end up being there for 4 or 5 years, or sometimes you're going to be there for 3. And then now, oh, by the way, this kicks off. But it's just the world and the time that we're in, Justin.
Yeah.
Think about it. For the last 2 years, we entered into a market in a sense that we've never seen before.
Yeah. It's a new market for a lot of people.
It is. And it's a different time
for sure
for a lot of people. And so we as financial advisors, if you want to say that, in a sense, we are. you know, because real estate is our financial market. Exactly. You know, a lot of people may go to the stock market.
Yeah.
You know, we invest in real estate, and I personally invest in real estate. So I believe in this, and I purchased during this time.
Yeah.
So I believe in it, and I understand that, interest rates may be up right now. However, historically, interest rates have rose.
That's what I was going to say. Yeah.
You know?
Yeah.
So let's talk about that point.
You know, you look at, you talk to our parents, you know, people that were purchasing 15, 20 years ago. They're talking about interest rates that are in the 10s, 12s, 13, 14s, and so on and so forth. So, you know, you have these conversations with those older generations, and they think it's a little wild that, you know, we're so hesitant on some of these things because, you know, they look at it as, hey, do you want to be renting and losing this $1,500 each month? Or would you rather start building some equity and put that money that you're losing in rent towards financial freedom for yourself down the road?
Yeah.
You know, so that's kind of one of the ways that we've been looking into it is, hey, you could either rent at a place for $1,500 right now, or buy a home at $1,600, and then within 5 years, that mortgage is still at $1,600. You know what that rent's going to be? It's going to be that $2,400 every year.
And a lot of people experienced that last year.
Absolutely.
For instance, I'll give you a client I had. She converted to being a buyer outside of being a renter now, because when your rent goes up $1,000,
it's incredible.
You're paying $1,800 already, and they knock on your door and say, "Hey, next month, or when your lease time is time to renew, hey, your rent is going up $1,000."
Yeah.
How many of you out there that happened to? Hey, by the way, $500 come rent renewal time, your rent is going up.
Yeah.
It doesn't happen with your mortgage.
No.
The only time your mortgage goes up is if the taxes go up or if the insurance goes up.
Exactly.
But that principal amount never moves, and then the taxes and insurance don't fluctuate so astronomically unless you have an arm.
Exactly.
You know?
And kind of talking into that a little bit, there's ways around that to get caps on those increases. You know, and that comes down to our education pieces.
Exactly.
You know, the homestead exemption is huge here in Florida.
It is.
You know, to be able to get $50,000 off of your taxable amount.
Yes.
So that is significant. And then what it also does is it caps the amount of increase on the taxes each year.
Right.
So as we kind of were talking about earlier, is that this Jacksonville market, let's call, you know, Miami or one of these areas, you know, a 3%, 4% increase each year. Let's say Jacksonville right now is at a 7%, 8% increase on market value. So what ends up happening is when those values on those homes go up, if you're not homesteaded, that increase on the taxes as well happens, so your monthly payment increases.
Okay.
But where we're educating our buyers and the difference on that front end is we're educating them on how to do that homestead exemption.
Exactly.
So right when they finish on that closing, they're going ahead and putting a cap on that increase, and it goes to 3%.
Right.
So no matter what, each year, the max amount that increase can be is 3%. So that's going to save you a massive amount of money on a day-to-day, because it really comes down to what we were talking about earlier, is how to build financial freedom and success and wealth for the future. And that's where me being your mortgage advisor for life versus just a transactional situation. So we can have those conversations post-closing and say, hey, you know, now you're in a situation where you're at that mortgage and that's going to stay there forever.
Right.
Even when that market and your market starts skyrocketing up. So when your equity is booming, now you're not worrying about your monthly
taxes
mortgage payment increasing, because you've done those steps, you've done those things to create a better situation for yourself.
Exactly, Justin. Exactly. And I want to touch on the rental part again as well, because a lot of people feel so safe renting. They feel like, okay, this is the amount and I'm comfortable with it. However, what a lot of people I think miss with the rental part is that money goes to someone else's account every single month, and you're not building any equity from that, right? And so the mind frame that I have, and the reason I decided to purchase versus stand as a renter, is the fact that every month when I make that mortgage payment, a certain amount goes towards my principal. Therefore, my mortgage amount is going down. That principal amount that I owe continues to go down. That's where that equity gets built. So instead of just throwing that money away to someone else's pocket, you're kind of saving it. You're building a savings account in a sense. So then now 5 years down the line, like when you say that it goes up, your equity in your home, goes up because house prices is going to continue to rise.
Yeah, absolutely.
Right? So you're building equity that way, and then you're paying down that principal every month.
Yeah.
So guess what you're doing? You're building equity.
Yep, equity
right?
and wealth. And then, eventually if it's a situation where you're like, hey, 5 years down the road and, maybe the family builds a little bit more, you have a couple more kids than you were anticipating. So now that you've been building this equity in this property on a market in an area that is constantly growing.
Exactly.
Versus other areas that aren't growing as quickly. Now in 5 years, you can tap into some of that equity.
Right.
Maybe there's a shift in the interest rate markets. Right now, sure, we're maybe a little higher than what we've seen maybe in the past 2 years.
Yes.
But the trends are showing that, hey, maybe we are going to go down a little bit. It's not going to be drastic.
Right.
But, if you're building that equity and in 2, 3 years, 4 years down the road, and you say, hey, you know what? I'm thinking maybe we add a second room or, maybe we add a little play area.
Right.
And you tap into some of that equity that you've been building, like you were talking about, those monthly payments that you're making. So now you can use those, refinance, maybe do a cash out, pull out some of that equity.
Exactly.
Now get that better interest rate that's currently being floated around. If that is the case, if it's a little lower than what it is now, you're able to pull out some cash, still keep a monthly payment at an affordable area.
Right.
And you're not having to worry about, looking for another house or something along those lines.
That is so true. That is so true. And that's what a lot of people don't understand with wealth building. Like, you need to tap into those assets, and then it'll help you out better, So with someone having a house, like for me, and I have other streams of income, other businesses, sometimes I can go into that equity of my properties and use that versus going to go get a loan.
Yeah, absolutely. And you don't have to pull it all out.
You don't.
And, so what I typically will advise somebody is if they've had this property for a while, typically what you want to see is you'd like to keep about 20% equity. So a lot of times when you're seeing a home buyer, when they're going into the process, you kind of hear, ideally, if you could put 20% down, that would be the honey hole.
Okay.
The reason you see that, there's this thing called mortgage insurance.
Okay.
So mortgage insurance is avoidable if you put 20% down.
Gotcha.
So that's kind of where a lot of people will say, ideally, I'd like to put 20% down so you're not having to pay that additional mortgage insurance. It could be $100, $200, $300, depending on that scenario, which we kind of evaluate on each individual person. But, when we're doing those refinances, ideally what I'm looking at is, hey, how could we find a way to keep you still at 20% equity? So that way they're not getting rid of all of their value that they have, so they can still have some of that and hold on to some of that value, not have to worry about mortgage insurance on their newest loan, still being able to tap into a little bit, but still having some equity in that property. So it's not restarting the whole timeline.
Exactly.
So just some insight on that portion there. And that's kind of where it comes into where I'm really diving into it with these clients and not when somebody's calling me and saying, I want to do a refinance, and I'm just saying, okay, good, you're ready to go, let's do it.
Right.
I want to look at their scenario. I want to look at, what their plan is, what's their goals, what's the reason for wanting to do this? Does it make sense? Because a lot of times people hear, refinance, do these things, and they hear from their brother, their mother, their sister that this is the time to do it. But in actuality, maybe 50% of the people actually are, in a situation where it may be eventful and smart to do it.
Right.
So that's the difference where, I know you on your end and me on my side, we're going to take the time to speak with these clients and educate them on the differences. And, I think that's where we make a difference for sure in this market.
Exactly, Justin. And I believe education is the key of it. And also trust.
For sure.
Okay.
Yeah.
I understand that people are getting into this market and it's unprecedented times for all of us. But if people understand that we're all in this life together, like we're seeing everything that you guys are seeing, we're hearing everything that you guys are hearing, we're getting the strains at the grocery stores, at the mall and everything. So in the housing market is the same thing. Yep. It's prices are high. People are not getting paid as they think they should or where it should be. We understand that point. And so that's where we sit with you guys. I'm not trying to put everybody in $1 million home. That's not where everyone's budget is. Yeah. So we come in and we see where you are.
Yeah, absolutely. And kind of going into that, it's a good segue for me to kind of go into, options that are ways to kind of counterbalance some of those higher market situations where cash is at such a premium right now. Like you mentioned, groceries being higher, gas being higher, everything that you want to buy right now is just a little bit higher. And that makes sense.
Right.
It's going to happen, when we have a situation like this, we're in technically a mini recession. So those type of things happen. But there's opportunities to get creative and find ways. And one of them that's really cool, especially with your market being a very high veteran, reactive market.
Right.
We have a program that's called the Hometown Hero, where basically this is a way we've been kind of combating that, high interest rates and, higher costs.
Okay.
Where basically this is a situation where if you are a veteran or a police officer or a nurse, anything along those lines that we would call a hero, so a lot of times, you may think that your position falls under that category. So absolutely let us know. It's a pretty broad umbrella.
It is, and I like that.
Yeah, I agree. It's a way to kind of give back to the people that are helping out on the front lines.
Right.
And what that does is it's offering 5% of down payment assistance towards the loan amount. So so whatever that loan amount is going to be for the transaction, you're going to take 5% of that, and it's going to be given as a credit, basically a seller credit, basically where it's going to be closing cost assistance. You can use it however you want.
Okay.
So what that's doing is basically getting these these buyers to the closing table without having to spend their hard-earned money.
Exactly.
And one of the beautiful things with a veteran loan, a VA loan, is that on each loan program, typically there's a down payment amount that you need to hit in order to be able to qualify for a loan. With veteran loans, a VA loan, one of the biggest caveats is that you're able to put 0% down.
Yes.
So what that does for a veteran who is utilizing their 0% down, and if they're getting that 5%, I can't tell you how many situations I've done, even in this year alone, where I've been able to get a veteran into a home with $0
$0. And that is so true.
And I'm talking $0, not, hey, $0 is what I'm telling you, and then you're signing a check for $150 just to give it to it at closing. I'm talking $0, you're getting into that home, and you're able to live in that home and hold on to that cash.
Exactly.
So there are there's some nuances to that program that if you guys do have any more questions on that, feel free to reach out to us. But it is a fantastic program.
It really is,
that is really just helping homeowners, take advantage. So they're not in the situation kind of like what we mentioned earlier where they're stuck renting. Because half the time the reason people feel like they need to rent is not always the month-to-month payment. It's the fear of, man, I need to come up with $15,000 for a down payment.
Believe it or not, that's a lot, Justin. A lot of people think that.
Absolutely.
And a lot of people think that they need this great credit score, in order to purchase. And I think it's a misconception.
Absolutely.
It is, especially when we have programs like Hometown Heroes.
Exactly.
And we've done transactions together with the Hometown Heroes.
Absolutely.
And our clients have been extremely happy with it because like we were discussing earlier, they get to hold that money.
Exactly.
So where you traditionally, closing costs is between 4%, 4% to 4.5%. And then, by the way, if you're an FHA buyer, 3.5%, we're going to need that on the front end for the deposit, right? So all in all, you're looking at about 7-8% that you'll need to bring to the closing table. Now you're bringing 0.
Exactly. 5% of that is significant.
5% is very significant.
When you're looking at high amounts on these purchase prices, it doesn't sound like a lot. But that's significant. That's car payments. Those are things that are very, it's tough to get rid of that kind of cash in this kind of market.
It is.
So to be able to give that as an option is so important.
Right.
And just to kind of segue into it, another way that we've been able to get kind of creative as well is even on situations where, let's say we're using that Hometown Heroes and let's say it's a situation where it's not a veteran. Maybe it's a nurse. So they can't utilize that VA loan, and there is a requirement on how much they have to put on the down payment.
Right.
So what we've been doing is using that Hometown Heroes, getting that 5% towards the closing cost, and then having the conversations with you guys when, you guys are out there hunting for homes with these buyers and saying, hey, if you're finding a home that's been sitting there for a little bit, why don't we see if that seller is willing to give some credits?
Right.
Because at the end of the day, half of these sellers out there are trying to sell their home so they could purchase their own.
Yeah.
So, and if a home has been sitting there a little bit longer because buyers are hesitant, and if you can have a conversation and say, hey, seller, would you be willing to take the purchase price that you want,
right,
but offer my buyer maybe $10,000 in closing cost assistance? Now you take that $10,000 plus that 5%. Exactly. Now you're in a situation where not only they're not a veteran anymore, but now we're getting them close to $0 in closing costs as well.
Right.
So, and that's happening on even situations where it's not a hometown heroes. So, you know, we're doing that on all loan types. So if it's a conventional FHA, VA, that's where we're, you know, educating our market out there, and you being an expert for your portion, you know, being able to go and have those conversations with the seller and make them realize, hey, at the end of the day, your seller is going to benefit more by giving this credit versus dropping their purchase price $20,000.
$20,000, or
you know, which is the only time you'd see a difference, you know, in a monthly payment, unless they're doing a $10,000 credit. Because think about, if they're doing that credit, you could get so creative with that. Let's say this person, you know, let's say your buyer has some cash.
Right.
Now, if they're getting an additional $10,000 in closing costs, since they can use that towards, you know, maybe lowering the interest rate or, you know, putting a little bit more down payment, which in turn lowers the monthly payment. So all these ways are just more ways to get creative in this market to kind of combat that a little bit of a higher interest rate. Exactly. So, you know, that's kind of the main point of this all, is to educate you guys that there's opportunities out there, and the more that we wait, the less those are going to be there.
Exactly.
Because, you know, the more that we wait, the lower those interest rates go, the more buyers are going to get off the field, and those sellers are going to be less willing to give a credit, because now they're in a situation where it goes back to what we were in 6-7 months ago, where we're getting 10 offers on a home,
one home,
and they don't feel the need to have to lower the price or do anything along those lines. But in this market right now, we're in a situation where sellers are desperate to move their homes.
Yeah. Because homes are sitting on the market a little over 50 days now.
Exactly.
And so, and then some are even going past that. So we're educating sellers, letting them know, hey, maybe you do give a little credit here. We're not telling you to take on the whole closing costs or whatever, but when you think of your house sitting there, you have a mortgage payment that you're still paying every month. Yeah. You know, you're still there. You're still worrying about where you need to go and whether or not you're paying for another spot. Because a lot of people, before they sell their home, they're looking at another property. You may have closed on another property. So you're paying mortgage at 2 spots. Which
could be detrimental. You know, especially like we talked about. The trending theme is, this market is not good for that.
Yeah.
You don't want to have to spend excess money that you were not accounting for.
Exactly.
You know, so that is huge.
Yeah. So we look at the whole scenario and try to see what is best for this scenario. What could the buyer benefit from here? What can the seller? Because I represent both. Yeah. You know, and so we just have to navigate this market almost like a day-to-day type thing, because it's different. It's ever changing. One minute the interest rate is here, 1 minute is there, and I understand the hysterical that's going on right now, but it's unprecedented times.
Absolutely. Yeah. So I mean, even, you know, with the fluctuations of the interest rates, a lot of times I'll have a conversation, and the first thing that somebody will ask me is, what's the interest rate today? And, you know, it's more than that. It comes down to more than what's the interest rate today. Right. There's so many factors that go into it. You know, the overall profile of that buyer, you know, the day, you know, that you're trying to lock in the loan. So just so people have an understanding of when you typically will lock an interest rate loan is when you're under contract on that home. Yeah. So a lot of times on that pre-approval stage, we may have an idea of what that interest rate's going to be at. But, you know, kind of like you mentioned, one day it's at this, the next day it's at this. So, you know, that's kind of where the experts of the market come into play, you know, because on a day-to-day basis, we're getting alerts on those things. You know, when there's a Fed meeting or something along those lines that are going to affect those interest rates, and whether it be a positive or negative light, GDP readings, all these things that are, you know, ways to kind of read what that economical market are going to do. Those are things that we're doing on our back end, to where we can educate our borrowers more than just the superficial surface level.
Today's the number.
Exactly. you know, because it's so more diverse and so more into it than that. You know, and that to the point of contract, that's when I can kind of dive in and say, going back to what we mentioned, where it's not okay, this is the situation we're going to do. No, it's, okay, we could utilize some of your credits. We can utilize how much cash you have. We could do it this way.
Right.
We can do it at this interest rate or with this and put more on the down payment.
Right.
Whatever the case may be. So that way I'm presenting options.
Yeah.
Send it over to them via email as well. Let them digest it. Go talk to wifey, talk to hubby.
Exactly.
See what feels comfortable for you. And then give me a call tomorrow.
Right.
And then we talk about it. We discuss it. And then see, okay, this is going to be the best option for you.
Exactly.
And then once that time comes, when the contract comes and we can lock in the interest rate, that's when I'm going to be the expert on that. Let's see if we want to float for a few days because I know that there's going to be a conversation that could benefit us. Or let's go ahead and lock in today.
Before this changes to go up higher.
Yeah, and that's where we're looking at, okay, well, Keneshia, are we getting any credits from these sellers? Is this something that I can have an idea in the back of my head?
Right.
The homes that we're looking at right now for buyer A and B, are they looking at older homes? Are they looking at new build homes? Ways that we can kind of discover what the best strategy is going to be.
And I love how you just said that, Justin, because you just threw something in my head at whether it's older or new construction, because a lot of people don't understand. A lot of the builders are offering those credits
Big
also. So we don't even really have to go to the sellers like that if you guys are in the market for new construction, because the builders are also offering these incentives where they'll pay all your closing costs.
Yeah, they want to get the homes off the lots.
Yeah.
Because it's a situation kind of like you mentioned, and what we were both talking about is with the hesitancy out there, the fear being brought out by the news, the newspaper, everything you see on Yahoo, and it's all just negative. I mean, it's wild to hear.
It is, and to think that people can't purchase right now because of interest rates. It's like, okay, so what do you do with the person that's moving? It has to move.
You have
Some
to do
people,
it.
yes, it's a decision to move as a choice, but there are others that they have to move.
Yeah, relocating for work or whatever.
Especially with me working with predominantly military people, they have to move.
Exactly.
You can't say,
no, now's not a good time.
Hey, sir, the interest rates are this, and so I'm not getting my family up and moving them to you. You just don't do that.
Yeah.
You just don't do it.
You can't.
You get up and you move.
Yeah.
And so in cases like that, let me give you a great scenario. So a buyer that I'm currently working with, here they're purchasing, but they have a home somewhere else that they're selling, right? So a scenario like that is we could work out a situation where when they sell that home, that equity that they're receiving from there, they could put it towards this house right here. A lot of people, if we're honest, a lot of people, what they're doing is wasting their money, right? And so they're selling these homes, and then they're just like, ho, we're going to live lavishly. But then you look at our market and say, oh, you got to do this for me. You got to do this. But what are you doing for yourselves in a sense? So if you're selling one home and you're moving to another area, let's talk about how we can use that money that you're making over there to offset whatever this current interest rate market is.
So beneficial. Yeah. I mean, those are, when somebody calls me and says, hey, we're selling our home to be able to purchase a new home, that is such a honey hole. Because you really can get creative.
You can.
The creativity on that front end is so, diverse when you have a situation where you have excess funds to put into the process, because then you really can come up with multiple options.
Right.
And figure out what's best for you and your family.
Yeah.
And we have situations where even if you're in the middle of selling your home, we can still go under contract on a new place.
Right.
So that's called a simultaneous close, where as long as the selling home gets sold prior to the funding on the new purchase, you're good to go. So, and a lot of times it's very simultaneous. You can transition where the sale funds go right into into the purchase of the new one.
Hey, sorry.
And it makes it so easy.
Yes.
And a lot of times what that does is it makes your monthly payment a lot more affordable. But that's where we'll kind of look at a situation where, hey, are you going to be in this home for 5-10 years? Let's see how we want to utilize those funds. Do we want to put anything towards the interest rate and get that interest rate lower? Or is this a situation where you're not going to be in this home long enough to where that money to break even?
Right.
So, do you want to have 20% down and get rid of that mortgage insurance and just cap it at that? Or do you want to, what's a comfortable monthly payment for you? So that's where we can kind of get creative on those things and see, where's your pain point? Is it your monthly payment, or is it having cash in your pocket at the end of it all?
And back to our financial guidance that we do, is one thing that just sticks so dear to my heart is my veterans, right? And so with them moving from duty station to duty station, I would give the advice to the veterans that don't be fearful of purchasing at your next duty station or whatever. What I did when we moved from duty station is you purchase and then now use that as a rental income. You don't have to purchase on your top dollar amount. I'm not telling you to go find a $400,000 or whatever. But for instance, like me, it's not these prices anymore, $90,000 or whatever. But you find you $150,000, you find you a $200,000 home, you fix it up a little bit, and you keep it. Keep it as a rental property. So when you move on to your next duty station and you purchase another property, that property at your last duty station now becomes that rental property.
Yeah.
And we're building equity. We are building that financial goal, because then that rental property that can be used for equity down the line to fund a business, fund a project, fund something else down the line, a college tuition for your kids.
Yeah.
So when people say, oh, purchasing a home, that's not a financial gains or it's not a great investment or something like that, I frown on it.
Yeah.
Because as you're building that equity, for instance, when I purchased my home, it was my second duty station, right? Here I am 25 years plus down the line, and I still have those properties, right?
That's incredible. Yeah.
So guess what? Now it's all equity in a sense,
it's
you
wealth.
know? It's wealth.
You know, it's setting yourself up for success.
Yeah, and I would love to give that guidance to you guys also, that don't listen to all that, because I bought my house at a 6.5 interest rate.
Yeah, see?
I bought it, right? And holding it this whole time, interest rates went up, down.
Yep.
And then guess what? I saw interest rates go down to 3%, 2.75%, and I refinanced. Yep. So I'm not sitting here, Justin, telling people things that I've never done myself.
Yeah, it's by experience.
Bought at 6.5%.
Yeah, exactly.
I did.
Yeah.
Okay?
We all have. You know, it's a situation where, there's a lot of hesitancy in it, but in actuality, it's just a situation where it is what it is.
Right.
You know, you got to do it because if not, somebody else is going to. You know, and they're going to take advantage of that situation where there's a property out there that is affordable. And now look, you were able to take advantage of that situation and you did exactly what we're referencing here.
Exactly.
It's having an understanding of real estate is a great way to build wealth.
It is.
Cryptocurrency, all these things are very wishy-washy.
Exactly.
One of those things that's always going to be there is real estate.
They're not buying it, they're not making no more land.
You know, it's not going to be, exactly. You know, and it's not a situation where all of a sudden if the market has a bad day, now you're losing money on it.
Right.
Once you have that property, it's yours. That's something that nobody could take away from you. You know, so to be able to hold on to that, you know, give it to your kids in the future or hold on to it as an investment property and supplement, you know, income, or have it pay for another one of your mortgages.
Exactly.
That's the way to do it, you know, and especially here in the Jacksonville market, it's so important to be able to do things like that and have that kind of mindset, because it's such a military town that a lot of people will buy here and hold on to those properties, even if they're moving and getting stationed somewhere else and renting it out to another military family.
Exactly.
So, you know, you're kind of able to give back to your community and you're still able to set yourself up for and family up for success.
Exactly.
And, you know, you look at Jacksonville as a whole, it's a great place for families to be. So, you know, if you're in your 30s now and you're thinking, okay, well, how could I do something to set up my kids for future success? If you go to one of these areas that's maybe not as built out right now and you buy a place for $220, in 5 years' time, that place is going to be $350. You know, because this is just an area
this
where
market is just running.
And no matter where you go, they continue to want to build it up because Jacksonville is just blowing up.
It is.
So it's a situation.
It's the largest landmass.
Yeah, exactly.
You know?
So, you know, you buy these type of things to be able to, you know, hold on to it. Give your kids something to hold on to for down the road.
Right.
And it's just going to continue to hold on and build success.
Right.
So, you know, there's absolutely ways to do it. And, you know, to your point, it doesn't always have to be this big $250,000 home. You know, quick story is my brother, he's not in the real estate market, but he loves it. So we have conversations about it all the time. He lives in Orlando, but he's got two investment properties here in Jacksonville.
Okay.
And one of them is in an area that was a little bit less desirable at the time. He bought it for, I think, like kind of the price point we're talking about, 150, 160. And now within 4 years time frame, it's up to 260.
Wow.
So, you know, he can either sell that home and make ton of money, or he can do what we're talking about, keep on holding on to it, and continue building wealth like that.
Exactly.
You know, so that's really what it comes down to, is it's just a great way to build wealth for yourself and your family.
Yeah.
You know, to where it's something that you can hold on to, or you can pass it off to somebody down the road. So let us know if that's something that you guys are interested in. It never hurts to have a conversation about these things, and just to feel like you can have a conversation about it and understand, okay, is this a situation for myself, or do I need to maybe hold off for a year and then I can do this? That's a great time to start and have the conversation with Keneshia and I is, hey, how do I set myself up for this? Sure, maybe I'm not ready for it right this moment.
Right.
But what do I need to do to get myself to that area? Exactly. You know, and don't think that giving me a call or giving Keneshia a call means, oh, we're on the hook. This is written in blood that now we have to go under contract. We're having to spend this money. That's not the case.
That's not the case.
I have so many situations where I'll talk to a buyer and maybe they think they're ready to go. And I look at the scenario and say, to be honest, I want to set you up for a good situation. And I think prior to you purchasing, you need to do X and Y and Z exactly. Versus maybe another lender would say, let's go. Sure, let's go. And then, you know, they're coming in at a 620 credit score, you know, debt ratios are super high, and they're into a home that they don't like. Now their interest rate is skyrocketed because when they got it, their credit scores were low, so you're getting really hit hard on the interest rates. So then now they're in a situation where they're underwater, spending all their money on something that they don't really care about, versus spending the time saying, hey, let's set you up for a 6-month plan. So that way in 6 months, we can look for something that you truly want. And you're calling me in a year later, and instead of it being, man, Justin, I can't believe you put me in this home. Now it's, wow, Justin, thank you for putting me in this home, because if you didn't take the time, we would have been stuck in something that we didn't want. So I think it makes a huge difference, you know, to have people that care. So I think that's where you know, we really play a role in these kind of situations, is educating people, because one, we're young. We've been in these situations. Yeah, exactly. So we've done it. We understand it. We're not talking about, you know, situations in our 50s or, you know, what are these situations where it's like, it doesn't matter to us. You know, these are things that we want to learn about. What we want to, so it makes sense for us to understand these things and want to know more. So, you know, use us as resources, because we're the experts of this market. These are the things that we're learning about, listening to podcasts and understanding these markets. So it could be pretty jargony to some people if you don't understand these things. And it's easy to fall into the trap of what the news is telling you and thinking, this just really isn't a good time. I'm going to hold off. And, you know, somebody else is out there taking advantage of that and utilizing, like we said, all those different options, the hometown heroes, the seller credits. They're utilizing all these things and taking advantage and building equity and wealth for themselves, versus the people that are sitting on the fence. And a year from now, they are going to do it, and they're going to lose out and have to spend $50 to $100 more a month. You know, because maybe the interest rates go down half a point. But what did we talk about at the beginning of this all? The actual purchase price of these homes each year is going to go up, because Jacksonville's market is continuing to grow. So let's say you're in a situation where you're like, oh man, Justin, I really don't want to buy right now because it's at a 6.5. But, you know, next year at 5.5, but now that home is $50,000 more, you're not breaking even at all. So now you're spending more money, even though sure, the interest rate is a little bit lower. But in actuality, what we could have done is taken advantage now, said, okay, sure, 6.5, but the seller is willing to give a little bit of credit. Let's get that interest rate to a 5.5, and get that purchase price at what it's at now.
That's what it's at now.
And now we're locked in at 30 years, and then we could refinance down the road instead of waiting.
Once it drops.
That's the difference, you know, because there's people having these conversations on the other end. There's going to be somebody who hears this and is still going to say, I'm just going to wait. You know, it's just not,
and that's their choice.
It is.
And that's their choice.
Our hope is that we can reach a few people, help you understand that now's the time to get off the fence.
Get off.
You know, at least have the conversation, see if it's something that you could do, or at least have an idea of what the next steps for yourself are to be able to get yourself set up. Because so many times I have, you know, people call in and they just say, oh, there's no chance that I'm going to be able to purchase.
Yeah.
And, you look at the scenario and you say, you've got a lot more opportunity than you think you do.
Yeah.
And, it happens pretty frequently.
It does.
So
it really
especially if you've got a lender and an agent who are willing to help.
Right.
And I love working with first-time home buyers because I'm a little bit of a handholder.
Yeah.
I like to be, I'm
a nurturer.
Yeah, that's my thing. Every job I did before this was bettering people. I was a personal trainer at one point. These are all things. Occupational therapy was kind of my schooling, and so I got out and I said, how can I help people, in a different way? And that's really where my why came from, is the difference of what I can do versus somebody who's on the other side at another lender that's telling a family no. So I want to be able to help those people that, maybe didn't think that the opportunity was there for them.
Exactly.
Whether it's a Hispanic family or something along those lines that didn't think that home ownership was possible. So that's where I'm coming into play and really want to help these people, find ways to do that.
Okay.
All right. So we've talked about our veteran guys.
Yeah.
We talked about our local hometown
heroes.
Firefighters, nurse,
Yep.
police officer, anybody knows high-risk occupations. For our other guys, our conventional buyers,
yes, sir.
What type of products do you have available to be able to assist with that market over there?
So for our conventional buyers, we absolutely have assistance programs as well. Ideally, a conventional buyer is kind of the honey hole. You want conventional. There's lower mortgage insurance. Interest rates are going to be better. You can refinance that. As soon as you hit 20% equity on that property, mortgage insurance is going to fall off right away. So a lot of times we put somebody in a conventional loan based off of credit scores, where their debt ratios are at, and then that will kind of determine what program we're going to look at, whether it's going to be conventional, FHA, VA, USDA, whatever the case may be. So for our conventional buyers, it comes down to taking a look at the scenario, kind of looking at all the pieces, seeing, okay, do you have cash to close? Is that a situation that you have the ability to do? And if they do, then sure, we're probably going to go with, a standard conventional loan. But we have, abilities to go with down payment programs as well for the conventional. So the Hometown Heroes is more specified towards, job specific situations. With a conventional, there is opportunities for those as well. So a lot of times what I'll do with those kind of scenarios is look at the big picture, see what that situation looks like. Do they have money to be able to put into the process?
Or do they need to use a
do
product?
They need to use that product?
So
it really depends, but absolutely for our conventional buyers out there, I don't want you to think that it's a situation of, we're kind of getting the back seat on this.
No.
It's absolutely
it benefits them also.
Absolutely. So, we use those, and the Hometown Heroes program even goes for conventional as well. So,
because it's about their job.
Exactly.
It's not so much about what loan type they're
Exactly.
Because it goes for VA, FHA, conventional also.
Yeah, absolutely. So we really utilize those in any way. And this really kind of dives into, and I appreciate you bringing that up because it really does kind of go into, hey, when we take the call, it's let's see what the best scenario for you is instead of taking a cookie cutter answer, because a lot of times a buyer will call us and say, hey, we want a conventional loan. They probably don't even know what that means. In actuality, they read it online. They said, oh, conventional loan is the loan for me. But in actuality, we're not going to know that until we take a look at everything. We want to take a look at where your debt ratios are. We want to take a look at what that credit score is. Because ideally, like I mentioned, a conventional is kind of the bread and butter. They want that. That's what you would call your good borrowers, where your credit score is good, your debt ratios are good. But there are a little bit more parameters. So your debt ratios can't go as high as some programs. Reason they do that is because it is, technically a little bit better of a loan. You've got that mortgage insurance that can fall off by itself. So the way that the loan, is done is basically where that is essentially going to be your better loan type, in that sense. So, but we'll look at the scenario and see, hey, if debt ratios are high, maybe your income isn't as high as you'd like it to be, and our debt ratios are going a little bit higher. Maybe we need to look at an FHA loan or something along those lines. So that's kind of where we come into play and see what would be the best option.
And conversate.
Absolutely.
We won't know until we talk with you and that's another thing too, Justin. I'll touch on that. That I'm kind of glad that it kind of slowed down some, because I miss the conversations with buyers. I miss sitting down talking with my clients to get a better understanding of your why and your when and things like that, instead of boom, let's go. Let's go. Let's write this offer.
Yeah.
Because a lot of them were blind.
Yeah.
They were blindly signing, and we had the way that they were able to offer above asking price and things of that. But now we get to sit. Let's have a conversation. Let's talk.
Yeah.
A lot of people were in the market and they had to move and they had to go and we had to move quickly. But now we do get the conversations, and educate the clients more better,
which makes a huge difference.
It does.
It builds a relationship. It builds a rapport.
Exactly.
I kind of mentioned to you, but before we started this, was when I was coming over, I was meeting with a client prior to coming in,
right?
And it was a situation where she had came from other lenders, and kind of had the conversation, first time home buyer. And she was just feeling very insecure. She had met with a couple different lenders and, they just were throwing a lot of jargon at her, making it very confusing for her. And she was going to all these things alone, her and her boyfriend, and they really didn't understand it. So I took the time, actually got her on the phone. She said, she kept on mentioning mom. So I realized this might be a situation where maybe she wants mom.
Yeah.
So I said, why don't you have mom come and meet with me in my office instead of doing this over the phone, and we could break this all out, have a conversation. We can all three sit in the office together. I took, we spent 30, 40 minutes breaking down some barriers, breaking down some walls and figuring out what their pain points were.
Right.
And, they left that office feeling so comfortable, and feeling ready to buy, smiles across the board. When they came in, it was a situation
that gloomy feeling. They walk in, they don't know what to expect.
Oh, no smiles. Yeah, they were just down in the dumps, and I came in.
And this is supposed to be an exciting process.
Yeah, so.
It's supposed to be so exciting. So us sitting here educating and talking to the clients, I hope is warming some of you guys and making you feel more comfortable that we're not here. Well, at least Justin and I are not here to just say, I'm going to throw you into a house.
Yeah.
It's not about me.
Yeah.
It's about you.
For sure.
At the end of the day.
Yeah, that's
so
why we
let's sit down and have the conversation. Be open with me, because for me to really help you and put my best foot forward, I need to know your situation. What's going on?
Yeah.
Because then I can say, okay, I remember Justin told me about the Hometown Heroes program, or he told me about this, or I remember this that I read. And if I don't know your whole scenario or your whole situation, how am I supposed to govern helping you?
So true. Yeah, absolutely.
Not only that, it helps with foreseeing errors that might be coming down the road.
Oh, that too.
And you have a better strategy to navigate those situations.
Absolutely.
And you as a customer don't know what we as a professional know.
Yep.
Exactly.
Okay?
Yeah.
So the more honest you are with us, is the more we'll be able to have a better outlook on your situation, to be able to give you that good advice you need to navigate the situation.
So true. Yeah, absolutely. That's one of the things. It's one of the reasons why I like to have conversations with my buyers prior. And, the first 30 minutes, 40 minutes of the conversation, a lot of times has nothing to do with loans. It's getting to understand what's their why, what's their reasoning for wanting to move. Is this a situation where, we're going to run into situations like you mentioned, or is there a job change coming up?
Exactly.
That we need to be privy to? Are you switching from a salary position to now commission?
Yeah.
Situations that, if you're a lender who's not paying attention to these type of things on the front end,
right?
You can run into a situation where you're halfway through the process, and now we're running into issues.
Exactly.
So a lot of times, I'll tell people is I'm the type of person who's detailed. I'm gonna flip over stones.
Right.
You're probably gonna say, Justin, why you need to know this?
And they need to know this.
Yeah. I tell people, if I'm asking you a question, there's logic behind it.
Exactly.
I'm gonna try to make it as simple and easy as I can for every single person I work with. If there's something that I don't need, I'm not gonna ask you.
Right.
Another beautiful part with my bank in general, with Bank of England Mortgage, is our branch has underwriters that are in-house.
And that's important.
So huge. To not have to send an email to a corporate office and wait 2 days for a response.
Right.
I can go and have a conversation with a buyer over the phone and say, let me find out for you.
Yeah.
And I can walk right down the hall and have the conversation with the underwriter that this file is going to.
Yeah.
So now I don't have to re-explain this to somebody. It's, hey, me and Susie had this conversation about what this is going to look like. We're good to go.
Right.
And then I can make you feel better about your situation, your transaction. Now you're comfortable and you feel like, okay, I can move on to the next because I know Justin's got it.
Yes.
He's ran his automated underwritings. He's spoken to an underwriter about this. So now that buyer can feel so much more comfortable, because I can't tell you how many situations I've been in where I'll take over a file that was from another lender, another agent, and they say 2 weeks before closing, they found out that, we needed this done and nobody told this buyer. And now they're scrambling and the other lender's like, well, it is what it is. You need to do it or we're not closing.
Or we're not going to close
exactly.
it.
And now that buyer is losing their binder deposit that they put on the home and all these things. And that can put such a sour taste in somebody's mouth.
And it does, Justin. It's so funny you say that, because it does. That's one of the main reasons a lot of buyers are frustrated in the market.
Yeah.
It's the fact that, hey, I sit down with this lender. Why didn't you tell me up front that this right here will be an issue?
Exactly.
You see it on my credit.
Yeah.
The lenders pull the credit. You see it on my credit. Why didn't you? So that's what I appreciate about you guys, is because you do like a manual or some type of underwriting prior to us
on every file
going out viewing homes. So this buyer knows you need to take care of this, you need to take care of that prior to.
Yeah, it makes a huge difference.
Yeah, it does. Because
it gives
getting
you
to the closing, we want them to be excited.
Yeah.
But a lot of times I see this doom face leading into closing because, this underwriter, not knowing that this underwriter is in a whole other state or another area, and the underwriter is asking for this. It's no personal relationship.
And you can be dealing with multiple different underwriters.
And it gets frustrating for a buyer.
Absolutely.
When they're getting pulled in,
Yeah.
So educating them up front, giving them the information up front helps throughout the transaction. So now when we're given this time to sit down with our borrowers again and actually taking them through the process, it seems scary for them because they've not done it before. We as professionals, we do it every day. So as I'm going through the home buying process, letting them know this is that, I understand throughout the transaction, we're still touching them. But it's something about, for me, my personality, let me know up front, what am I going into? And then as I'm going through the transaction, you say, aha, so you remember this point right here? This is where we are. And then next, this is to come.
Which is so huge. It's clarity, it's transparency.
It is.
It's such a lot of people in this industry forget how daunting and scary buying a home could be.
It is.
Especially if you've never done this before.
Right.
Saying that you're going to go and buy a home for $350,000 and putting $15,000 of your own hard-earned money, that's scary.
It is.
And you're a person, you're a prideful person, you're from Miami, you're like me, we get the little, it's a flair, so it's hard, it's a prideful thing when you're having conversations. You don't want to say, I don't understand that. You don't want to say, can you repeat that?
Exactly.
So to take the time, understand it, make them regurgitate it back to you, make sure they understand these things, and you're going over these things with them and coming up with solutions and coming up with plans. And it makes such a difference because now they feel comfortable and they think, okay, I can ask questions because he's broken down that barrier of, man, I don't feel comfortable. I want it to be a situation where at the end of the day, they look at me as their mortgage advisor for life.
Yes, and I love it, Justin, because as a real estate professional, what I love is once we close or before we even close, before we get to closing, and my clients say, are you going to be there at closing with me? I'm like, you bet. You bet I'm going to be there with you. And that's because we've established this relationship where, they're going to a title company that they've never seen before. They don't know these people. They've heard on the
they've
phone,
seen back and forth.
You know, however, this person that brought them out to see the homes, this person that has been in communication with them for the past 30, 35 days, right? Yeah, they want to see me there. So we've established that relationship, and I love that.
Me too.
I love that.
I agree.
Getting to the closing table and we're doing these hugs.
There's nothing like it.
It's nothing like that because I know moving forward, this property that they're moving into, we took our time with it. They know what they're purchasing. When they get in it, I know they're going to love this home. And hopefully it's going to build their wealth. Not hopefully, it's going to build their wealth for them. And if they keep it long enough, they can pass it on to their children if they want to. We've touched on that so much today.
I know. It's so important, and it makes such a difference.
It does.
Because I just being in this industry for now close to 10 years, I see all the differences, working with different agents and, hearing the feedback that I get from some of them. It's, I can't even get this person on the phone, or I can't, I won't hear from them for a week, or I'm asking questions about this inspection and I can't hear anything back from my agent. And so the feedback that I get every time we've worked together, it's such a difference. And then just seeing the glow on the buyers' faces at that closing, you can really tell the difference.
Of course.
And they feel comfortable. It becomes a family, at the end of it all.
Yes.
And I know that that's something that you and I have established.
Right.
Because at the end of the day, we realize that both of us have a very similar mindset.
We do have a similar.
We want the same thing at the end of the day, and that's for. We both kind of care a little bit about what people think about us.
I do.
So at the end of the day,
and we care about our clients at the end of the day also.
Yeah. So we want good feedback. We want to know that they appreciated what we did for them, and that they had a good experience.
Right.
So that's a big part for me. I want to know at the end of it that I made them happy. I provided them with the service that I told them I would. So that's huge for me.
Right.
So I never want to make it a transactional situation where it's, hey, like I mentioned, BK, have it your way kind of situation. This is it's a process. It's a whole, thing that we're going to go through, and we're going to do it together. There's going to be times that, sure, it's going to be a little frustrating. I would be lying if I said the entire time you're going to be like, yeah, Justin, I love getting documents for you. That's just not the case,
I'm going in that portal. I'm going to sign those documents, and I'm busy today.
Exactly.
Yeah,
everybody's working.
Yeah.
It's the difference. But what I try to do is get people excited.
Right.
When we're going through it, you're almost there. Yeah. Let's knock it out. Get me this baby, and we're going to get there.
Right.
So it's a difference of, oh, give me this document, and if you don't get it over to me, we're not going to close.
Yeah.
And, we've got problems.
The scare tactic.
Exactly. What does that do for somebody other than reduce the amount of sleep they get? Yeah.
These buyers are living life already. So they have issues that's going on in their personal life and this and that. So if you're throwing things at them constantly, I like to put myself in people's shoes.
For sure.
And you're throwing this and you're throwing that at them. Of course, it's irritating. So if I have a document today, I may wait till tomorrow and say, hey, give it to them, because I know they just got bamboozled with these other documents here, So case by case scenario. That's what we've been talking about the whole time. Case by case scenario. Your problems, your issues, your applauses may be different than someone else's.
So true. Yeah, and that's where the conversation comes into play.
Exactly.
Because a lot of people don't understand what their specific situation calls, and this industry is so specific to each person and their scenario.
Really is.
There's no one answer for everybody. There's no one interest rate for everybody.
Yeah.
It's everything is different.
I've never had two transactions the same.
Never have had it. Even ones that are closing on the same day.
Yeah.
It's always going to be different.
It's something different.
But that's the exciting part. I appreciate a challenge. So, when I'm looking at these situations, I'm a competitive person. So, I want to know that I got the best deal for you, and I'm going to get this closed on time.
Yes.
Because that's just who I am.
Yeah.
So I'm a caring person who's going to take care of, our people.
Exactly.
We're going to get them done on time, and we're going to close it correctly and make sure that it's a situation where they're getting the best possible scenario for themselves and their family. So,
man, this was awesome, Justin.
Yeah.
And I thank you so much for coming in here
this is
and
fantastic.
Sharing your knowledge with everyone. Yeah. We got to do this again, Justin.
We will.
I love it.
I will keep you guys up to date on the market and what's going on. So hopefully we'll do this again.
Of
so
course,
we can kind of keep it going.
Of course, educating our clients is what we love doing, guys. So thank you all for tuning in today. Is this a good time to buy? We have Justin Travis with us from Bank of England today. Any last words you want to share?
I just want to say again, I appreciate you having me on here. Guys, this is an exciting time for real estate. So take advantage. Do not let the news and all these headlines scare you. If I can tell you guys anything, it's that the opportunities are real out there. And we live in an area that is so frugal with opportunity.
Yeah.
So, you know, let's get out there. Let's get the calls going. So that way we can see what we can do and get you guys started out there.
Get you started, guys. So once again, thank you for tuning in. This is Keneshia Haye, your Jacksonville Veteran Home Loan Specialist. Until next time, guys, be good to each other and take care of yourselves.